Hello, my name is Nicole Gyles Fullwood, and thank you for tuning in to my final Capstone project, which will be a presentation of the strategic analysis of Lanxess Corporation, in which I will be identifying or reporting on the findings of strategic issues for the company and recommendations. Due to timing constraints, I will be presenting on key details. However, will not be diving too much into some of the essentials. However, it is included in this presentation as I believe that these contexts contributes to the strategies that's currently existing in the company and the strategic issues as well as the recommendations. So Lanxess was founded back in 2004 as a spin-off of the Bayer Chemical and Polymer Division, with its headquarters based out of Cologne, Germany. The core business for the company is the development and manufacturing and marketing of chemical intermediates, additives, specialty chemicals, and plastics, all forming 4 segments and 10 business units in the company. The strategies objectives of the company are based on value statements of being a company whose success is determined by its personal commitment and performance of their employees and a set of guiding principles, all listed here. The slide here gives you an overview of the group structure of all the product segments, business units, and some of the applications. The organizational structure of Lanxess can be defined or described as a mechanistic organization where decisions are centralized, forming more of a hierarchical and bureaucratic environment, and the company is broken up by business units and group functions. This is a screenshot of our global presence worldwide. Okay, and there is a deeply engraved social responsibility of Lanxess, all falling under an overarching corporate responsibility to maintain sustainability in the areas of economics, social, environmental. Their internal compliance management system helps to uphold adherence to such provisions and rules, and also to ensure proper conduct of its employees. Lanxess falls into a specialty chemical industry. This industry makes up of several sectors and subsectors, including, for example, adhesives, cosmetic additives, colors, fragrances, just to name a few. Majority of the specialty chemicals are considered organic because they're driven by customer demands and they're used in everyday products by consumers. Some additional key industry analysis details is back in 2011, the market actually had total revenues of $767.5 billion, and that was expected to grow to $980 billion, which it did meet, actually surpassed for 2016. The world's top 5 specialty segments back in a 2012 report had to do with specialty polymers, industrial products, industrial cleaners, construction chemicals, all are actual segments that Lanxess occupies. Let's discuss here the position of Lanxess in the industry. It was actually included, or it made the cut, I should say, for the top 10 largest European specialty companies. And in acquiring Chemtura, has also made the list in the United States as well. Some trends to keep an eye on would be India's emergence into the industry, and the specialty chemical market also has a pretty strong share in the industry. Also, some of the increased demands for food and also the increase in per capita is helping to drive or increase the purchasing power in several sectors, including the automotive sector, which increases demand in segments for Lanxess such as their polymers, their coatings and paints, their sealants. The increase in constructions also has helped to boost the construction segments for Lanxess. So just a few changes in the industry. And this would be a projection of sales going into a market size going into 2024. These are driving forces to Lanxess's bottom line research and development, shift towards digitalization, having skilled professionals, any sort of political shifts, as we've seen with the recent trade disputes with China or Brexit, and also continuing to make complementary acquisitions, as they've done with Solvay and also with Chemtura recently. Okay, competitive analysis. So Lanxess top competitors are BASF, Arkema, Salve, which they purchased their phosphorus business, not the entire company, but they purchased that line of business back in 2018, and Exalta Coating Systems. All are competitors because of the products that they offer and also the markets they serve, as well as their core competency and capabilities. This shows you where BASF ranks, but it is important to know that BASF has been in business since April of 1865, so it's been around way longer than Lanxess has. We can see a representation here of net income, some competitive analysis of their operational metrics, and you'll see Lanxess's position here among the top 50 chemical companies. Notable here is the fact that they've moved from 34th position back in 2016 to now occupy number 28. So it's definitely moving in the right direction. Some ideas of competitive strategy that Lanxess uses would be exploiting and exploring dynamic capabilities. Also, they focus on their core of manufacturing specialty company, as we saw with them divesting 50% of their shares with Arlanxeo, the Saudi Aramco merger with Lanxess back in 2014, and their strategic in their decision of their mergers and acquisitions. Also, their cost leadership strategies help to give them that competitive edge. Their diversification strategy is also worth noting, targeting products and market diversification, also looking for increased scale and scope. It has to do with increasing their product portfolio and also targeting growing regions such as North America and Asia. Okay, also applying their shared competencies across affiliates and subsidiaries and emerging in new markets. This will help to put Lanxess in a position for synergy and growth. Okay, the Porter's five forces are listed here. I will not go through all the detail, but you'll see here where the most, the highest force would be in the threat of entrance, and you'll see the details listed as to why, and the bargaining power of buyer. But there's relatively low threat when it comes to substitutes. The power of suppliers and also rivalry, I should say, is actually a very high force due to what the current competitors that's out there. It's pretty high. Okay, now to drive his value chain, Lanxess would need to focus on the following primary activities: planning, sourcing, marketing, logistics, inventory management, marketing and sales, as well as service. And I provide more detail here on the slide as to how that can be done. Same thing goes for their supporting activities in procurement, research and development, human resource, information systems, as well as Lanxess infrastructure. Some key value drivers for Lanxess would be their on-time delivery, their competitive pricing, speed and agility, convenience, innovation, customer service, and very important would be high-quality finished products. The marketing analysis shows a representation of their segments by geography and also business segments. So you see how they're spreading their portfolio. I thought it would also be important to show where BASF ranks in both geographic and business segments. One important note that I wanted to point out here was that Lanxess actually has a higher market share in the agricultural solutions. It's called the agrochemical segment. For Lanxess. This is an area of opportunity for Lanxess to continue to have a strong foothold. So as they're looking to expand their portfolio, that they continue to move in areas where they can maintain this competitive edge over BASF. Sales segments under the advanced intermediates, which is where the agrochemical products actually fall. Lanxess did very well in 2018. We've seen 11.7% rate in this area, and you'll see here where it's actually done very well as far as a percentage increase from 2017 over to 2018. So this is definitely an area for them to keep their eye on. As far as performance chemicals is concerned, they went down, so they would need to ensure that they're ramping up their innovations to do better in those areas where they're not performing at their best. The pastel analysis shows forces, and I will not go through this in detail, but it's here for your review, forces that has the potential of impacting profitability, very key forces that Langsys has an eye on that has helped to shape this strategy or the strategic issues that has been identified in the report. So political, economical, socio-cultural factors. Okay, so Lanxess financial data is worth reporting. 2018 was considered a good year for the organization, where EBITDA increased by 9.8%, and it's a result of their acquisition of the Solvay phosphorus business, also due to its sale of the Orlanxio merger, which was that merger 50% shares in Saudi Aramco's company back in 2018 that has really opened up, given the company approximately $1.4 billion, or euros, I should say, which aids in realigning the company, but also reducing the financial liabilities of the organization. So focusing on their core really helped there in divesting that part of their business. Okay, you also see here some quarterly reporting for Lanxess. So despite like the lower sales volume, this was offset by several factors such as the favorable exchange rates, increased selling prices in the US, again, the acquisition of Solvay in 2018. So definitely on the right track, but these are also positive changes that has helped so far in Q1 of 2019. Capital market is absolutely worth mentioning here in this analysis because they've had a significant recovery in their shares compared to performance in the last quarter of 2018, actually outperforming, as you can see here, the market indices growing in value of approximately 30%. So you see where they're positioned financially. The SWOT analysis was also included in the finding because it highlights strength of the organization and weaknesses as well. Again, here for your review, as it all stems back to the strategic issues that the company is facing. You see the opportunities here, such as free cash flow, again, from the sales of Orlanxio into the increased acquisition, the innovations, and also the threats that the company faces. Okay, this also gives you a review of the resources that Lanxess has, tangible and intangible resources. Okay, now this is also key. The Lanxess of viral analysis shows that it's occupying in a lot of areas of a competitive equality parity result, where it should really be moving more into a long-term sustainable competitive advantage, but it has a lot of equality and parity. So its offerings and resources are imitable by other companies, and it's not very rare. So that poses as a risk to the company. I also thought it was important to identify the core competencies of the organization, and they're all listed here as well to be reviewed. So what does this all mean for Lanxess? Lanxess needs to maintain a balanced portfolio. It needs to look to reduce its economic dependency on individual sectors and segments, increase their presence in regional that are growing, such as North America and Asia, and also develop circular economy to eliminate waste and continue using resources for sustainable products, thus diversifying their portfolio. My recommendations would be to continue to explore additional capabilities to migrate from competitive equality and parity to more of a long-term sustainability, to also utilize its resources and development resources to tap into blue oceans, this to be competitive towards its rivals. It also needs to increase automation, standardization, inventory management, all kind of boosting and optimizing the supply chain. It needs to continue outsourcing non-core activities and also focus more on profitable markets in profitable regions, and to integrate its value chain by strengthening its lower performing business segments that we described earlier in the financial analysis, and also strengthening production facilities, which is key. Final thoughts. So Lanxess has maintained a strong presence in the industry. It's definitely a company to contend with. However, it needs to keep moving in the direction of exploring blue oceans, also diversifying its portfolio to reduce the dependency on particular segments, and also tap into new markets by getting complementary acquisitions that complements its current business model. Agility, adaptability, and alignment will be key success. Thank you for taking this time to listen to my presentation.